Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Thick will be with us in a couple of minutes here, probably around 8:10 or 8:15 or so. And in addition to that, we'll be joined by Mish Schneider at 8:35. She is our guest today. She's the Director of Trading Education and Research at MarketGauge. But between now and then, we got a lot to get to. Obviously, the big story is the market just trying to come back, and we'll talk through that. We'll talk through the bank earnings. We're finally in earnings season. We had JP Morgan. We should have had Wells Fargo and Citi just come out at 8 o'clock. So that'll be the lead story of today's show, and a lot of ratings today. The analysts are busy. There's been a lot of action, and when there's a lot of action, the analysts tend to be busier. So big ratings today to Microsoft, Square, Netflix, Snap, Twitter, RH, so a lot to get to on our show. Joel, what is the word in the overnight session?
Major green on the screen everywhere. I showed Spencer and Brent that all the stocks I got up here in commodities, about 80 of them, they're all in the green. Every single HDP is unchanged at 1985. So let's go to the S&Ps. Settled 45.5, got that higher open. Never saw that closing price, went all the way to 27.85. So that's your pre-market high, 12 handles away. That's a target on the upside. 98.75 was the high from yesterday. I'm thinking maybe we might see an inside day on this, but that would be a level to get us back into the $2,800 handle. We have crude trading up 55 cents here. It's 71.52. That got hit along with the rest of the market yesterday, but rebounding. Current high 72.01. Gold, giving it back. Now we broke above 1220. We've been talking about that level, and no follow through as of yet. We're still over 1220, but down $2 at 1225.5. Silver in the green by nickel at 466, and Bitcoin just hovering at that major support. It's up $42.50 at 6190, but perilously close to falling under 6,000 and going to 5,000, 4,000, 3,000, 2,000, and 1,000.
All right, Joel, before we get to the banks, because we did have Citi and Wells right at 8 o'clock, tell us what yesterday was like.
Well, first I just want to talk about the supposed whale trade that went off yesterday in the afternoon. And, everyone is trying to pin in on one bank or one institution doing a big asset reallocation. Mm-hmm. And, we're talking about it with Dennis. It might have been a margin call as well. Also, I would say, the margin call, boom, they hit the button, it's over with. But if it's a big money manager trying to do a trade like that in the middle of the day, I mean, very poor judgment. But that did mark the low on the, that was if you look for capitulation, that 27 and a 12 quarter low, we are 60 handles above that. That's capitulation. And if you want to talk about, algo's gone wild or something like that, Dennis and I did this video several years ago when there was a night debacle and they had a computer running, and they lost a lot of money on that. So that's something I just wanted to show you guys. As far as yesterday goes, that rally off the open was wicked, man. That caught a lot of people. Some of the stuff that I was short, I thought, I covered because I didn't think they would participate. I thought, the market's going up, but they didn't go up. They kept going down. So that was really a wicked rally. This is, more tame now. Be a much easier trading day. But just a lot of volatility, and that move off the hop, if you were trying to do stuff in the first 10, 15 minutes, man, it was wicked. And, sometimes like that, it's just if you're Dennis, you're trying to unwind positions. Sometimes it's a little better, to sit tight and take the liquidity off the open. But other times, like if you going back and look at the charts afterwards, things kind of settled down by 10 o'clock, and it was a little bit easier after that. But, all said and done, the market's recovering today. Let's go to those bank earnings.
All right. Well, we did get Wells Fargo and Citigroup at just about 8 o'clock. JP Morgan was about an hour before that. So let's go to Wells Fargo first. Wells Fargo Q3 EPS $1.13. They missed the estimate by 4 cents there. Sales in line at $21.9 billion. So in line sales and a slight miss on the EPS for Wells Fargo.
Well, made a new low of the move yesterday here, and we are rebounding. We are up at, where are we trading? We're trading at 52 even. That's up 56 cents. I think what I would do is just, look at yesterday's high. If they really like this report, they will take it through yesterday's high, which was 52.84. Boom. So we got a long ways to go to get up. So that's the only real resistance point. And if it hasn't gone there yet, I think it's going to have a hard time getting up there. If you do go into reverse here, 51.44, that was a low close for the move. So boom, goes red. 51.01, that was the low from yesterday.
All right, Citigroup now, Q3 EPS on C, $1.73 versus $1.69. So a 4-cent beat there. Sales 18.3 versus 18.45 billion. So a miss there. So a mixed report here for Citigroup.
A pop, but not much compared to the drop over the last 2 sessions, up 82 cents, 69.20. I think I look at the pre-market high here, and we got up to 70 even on the nose. So backed off 75 cents. So need to take out that pre-market high. Yesterday's high, if you're looking for another target on that, I think I'll stick with the same theme as I said in Wells Fargo. 70.65 or 70.65 was yesterday's high, is another potential target, and then really opens up a trio of highs in between 72.50, 72.98. Don't think we're going to see that today.
And then last of the big three to report this morning is JP Morgan, JPM, reporting Q3 EPS of $2.34 versus a $2.25 estimate, so a 9-cent beat on that. Sales $27.8 billion versus a $27.5 billion estimate.
Stock remains the same here. You're trading up in the pre-market. You did get a little bit higher. You got to 110.83, currently trading at 109.75. Show me yesterday's high, 111.47. I mean, that'd be, another $2 from here. Just really careful on these, because if these things start to leak and then they go red, this is down at 108.13. And you just got to assume that they're going to be gunning for the low of the day from yesterday and all these issues. For JP Morgan, it's 107.38.
All right, so we're seeing the same thing we've seen for the past few quarters now with the banks. It's just mixed earnings. It's a little early now to really get a feel for the trading action, I would think. But they're all going to move in line, you would think, like they usually do. And what we've been seeing, Joel, and the pattern that Dennis pointed out a few days ago was we always just fade this.
Yeah, I mean, there's a lot of people. I mean, these charts are not looking good. I mean, there's no way you could say, okay, well, it hit the low yesterday. This is a good earnings report, and we're just going to rip back up to all-time highs. I mean, just look at JP Morgan. The last 2 days, you fell from 115 down to 107.38. And so, I mean, $6 away from 115 and clearing that double top, I don't see it getting over 115 for a while here, with the way the temperament of the market is. So overhead supply, we talk about that all the time, and certainly some overhead supply in these banks.
Will the volatility from the past couple of days, will that have an unusual impact, you think, specifically on the bank stocks today? With that plus these earnings, will that?
Banks are, even before the volatility, banks are, especially JP Morgan, are just wild on earnings days. So the fact that you had volatility yesterday, yeah, that's a factor, but they just move around like crazy. I mean, when I was very, very active at Bright and everything, I just would not trade like JP Morgan on earnings days. So be some good action. I really would like to, for the owners of the stock, I'd love to see it get above 111.47, but that's almost $2 away. I just don't think it's happening today.
And then one more, the last one we're reporting this morning, not as big, but still notable, is PNC Financial, ticker PNC. They're reporting $2.82 versus a 2.72 estimate. Sales of 4.36 versus 4.35 billion so beats on the top and the bottom line there for PNC, but doesn't seem to matter this morning.
That one's in the red. That's not good. It's down 61 cents here. Your pre-market low is 130 even. There's a nice round number for you. Currently trading at 131. The close now will be resistance. The close is 131.61. You are trading below yesterday's low here. So, and this took out some monthly support at 134, 135. So this is the weakest of the week here. So if you're trying to do some bottom picking, I'd stay away from this one. 130.46, that was your low in November. And then you drop off. There's not much in the 120 handle. September low of last year was 119.77, but that's quite a ways away.
All right, so Dennis will be joining us here in a couple of minutes. Between now and then, though, I think we should go to the ratings because
there's some big ones.
We tend to see this a lot. Is when there's a lot of volatility in the markets, the analysts will go away, and then as soon as that volatility sort of calms down, they'll all come flooding back in, and that's what happened this morning again. Today we had a lot of interesting ratings today. Let's start with Square getting an upgrade from Canaccord, hold to buy, and raising their price target from $60 to $90.
Okay, well, Dennis was right. It made that low yesterday. Little later than I thought. I had 65 even, right on the nose, and of course, going back in hindsight, you can see that matches a pair of lows that was at 65 even and 64.22. That was back on August 1st and 2nd. You have now distanced yourself from it. This has a chance to take out yesterday's high, and that's where we're hovering right now. 74.38 was yesterday's high. I'd call the next level after that 76.90 to fill the gap. And you know what? Spinner's mentioned here about a V-shaped recovery as opposed to a W. I'm thinking the latter too. And a V is when you just go whoop, straight down and straight back up. That's what we had. When was that? Was that in January? When did the market have the big dip and then just came roaring back? Whereas a W pattern, that means like you had the dip and then you went up and then you're going to dip again. I am definitely in your camp here on the W1. I just think that, the changes in interest rates and, just the volatility that we've had. But who knows? We could just do the V and all the buy the dippers will reign supreme again. But definitely in your camp. Great point, Spinner. Thanks for bringing that to my attention.
All right, Brian Weiser at Pivotal going against the street this morning, upgrading Snap and Pivotal. Snap upgraded to buy. I'm sorry, Snap and Twitter. What did I say? Snap and Twitter. Snap upgraded to buy. Twitter upgraded to hold. Here at Pivotal Research. Let's start with Snap, but shoosh.
Okay, I mean, it's up to. Does he have reasons for doing this?
I'm sure he does. I haven't seen the note. I looked at it briefly for like 3 seconds, but I didn't really take too much a dive into it.
Yeah. Boom. I don't know. I mean, if you want to go out and own this stock here at 710, 29 cents, trading at the highs of the pre-market session. That's 716. So you want to see follow through from that. Back over 7, I would say over 7 here, you might have a chance to challenge your 3-day high at 740. I'm not a huge trend line person here, but you could draw a trend line coming off all these highs and everything. And maybe if it breaks above that trend line, you got a chance here. But a nice target for that one on the upside would be 740. If it does go into reverse, I think you can find some support ahead of the all-time low. That was 646. But after an upgrade like this, trading up in the pre-market, I'd say I'd find some support at the close at 681. This stock was green yesterday.
All right, here I'll read directly from his note right now. So here's what he said. Here's what Brian Weiser said about Snap and Twitter this morning. The data we look at is showing a widening user base, although one which is collectively reducing its time on the platform. And this is regarding Snap. Our take is that it is not too late for management to find ways to reverse recent usage trends and generally improve monetization regardless of those usage trends. With the ongoing experimentation, we have some faith that they should be able to do both. So here we go. That was Brian Weiser on Snap. So basically, it's so cheap right now is I think his argument, and it's not too late. the ship has not yet sailed.
Spencer, the big question is, are you putting it in your portfolio?
No. But I wouldn't have done it at the IPO either. So all right, Snap and Twitter upgraded this morning. What else do we have?
Twitter, let's just talk about Twitter yesterday. I let go part of a long-term position yesterday, just in the turmoil and regretting it now here. But I don't know, up 70 cents here, 27.70, just hovering up here. Pre-market high is 27.77. So, hey, maybe we got a chance to break into the $28 handle. Major resistance, once again, reemerges at 29.12 was your 2-day high. The only thing about this is like Twitter being up 70 cents on 57,628 shares. I mean, a lot of times that's, it had a big ranges the last couple days, but it's really going to have to get the hops here. Some days it just opens up and can run. I just think you got some people stuck from Wednesday that might be using this rally to lighten up. But major target could be 29.12.
All right. We have Dennis with us now. Dennis, what is the good word from your hole?
Oh, getting out of some trades here. I had 65 on overnight. I'm down to 49 trades right now, so 49 positions. So I'm wiggling out of some stuff. I just do the index ARB at night when it's crazy like this, because you'll see some people throwing, the baby out with the bathwater type of deal. And last night, they get excited and they start buying everything up. And there's just, different, little inefficiencies that are created that I try to take advantage of. Worked out yesterday. I had one of my best trading days of the year. Today I'm up. I'm going to, obviously I still got a long ways to go. We don't know how all these 48 positions are working out. So far, so good though. Had a lot of China overnight that I had bought, and that's actually working out because China is very hot here right now. And also I've got shorts to offset it, but when you see China up 3%, the S&P is only up 1.5%. That's usually good for my arbitrage. So
what was that?
I banked that. I basically was banking that China was going to continue up overnight.
What was that stat you gave this morning that you were averaging a trade a minute, and then you compared it to during the financial crisis?
Which is nothing. So I had said, okay, so just for instance here, let's go look at my updated stats. I actually started late today. I didn't get until 6:40. So I've been at it about an hour and a half. So far in the hour and a half, I have made 57 trades. So you're not even quite a trade a minute here right now. So 57 trades. Oh no, wait a second, that's not right. I'm on the wrong page. 67 trades. So I've had 67 separate trades here working out of stuff. And like some of these trades are partials, some of these, but just looking at my execution screen, some of these, I'm wiggling out of stocks. I'm getting out of a couple hundred here, a few hundred here, just wiggling out of some different things. So it's not like I've, sold 67 different positions.
I got you.
I've just had 67 trades this morning. So in the last, but that's averaging just under a trade a minute. So it's not that active. And you were saying, whoa, that's active, a trade a minute. Wow, when I go back to the financial crisis, and I was running some algorithms too, and even before that, I've run algorithms for years. I can remember the financial crisis that I was getting a trade about every 2 seconds. So all day, every day. So I don't even know, you start adding that up, how many trades is that? 30 a minute? So, but that's using algorithms too. So at 30 a minute, then you go, I don't know how many minutes are 60. You can just kind of add it up in a hurry how much you're trading back then. So, and I'm wiggling in for nickels back then. Well, in the financial crisis, a little bit more, but when you're doing different types of arbitrage strategies, and I'm running algorithms with it, the machine's putting on more than I am because I physically couldn't do a trade every 2 seconds. So it's really, with algorithmic help. A trade a minute, you can easily do. A trade every 30 seconds, you can easily do. But when you start getting into that trading every second, you got to have automation to help because we're just not that good.
Hey, we got a good question here from C. Roy. In what exchange? Well, no exchanges are open at night, obviously, Dennis. But you use a lot.
Well, they're open till 8 o'clock.
Well, they're open till 8. The like Arca and the other ones, or what other ones are open till 8, right? Obviously, New York Stock Exchange.
Yeah, they're all open till 8. So they open at 4 in the morning. Arca and NSDQ Nasdaq open at 4. Edge and all the direct edge products open at 7 a.m. Eastern, and then they all go till 8 o'clock. So they're trading until 8 o'clock, and then they close, and then they reopen at 4 a.m. Those are the pre-market and after-hour session, those hours. So lots of different exchanges you can trade on after hours. I mean, AMD at any given time has like a 1 or 2 cent market. It's got a 2 cent market right now. It's very liquid. These are the kind of stocks I'm trading. I'm not trading remote stocks that don't have a bid at all. You know, if you're trading something that's not trading under 100,000 shares a day, there's going to be no bid, no offer. You're wasting your time trading that kind of stuff. But when you look, you know, and you start looking, you know, at these other, you know, active stocks, there's active markets. I mean, Bank of America right now has a 3 cent market. It's pre-market, but it's very liquid. So you've got to go in after hours. You got to be trading the stuff that's more liquid, because if you're trying to trade something that's not liquid, nobody's even looking at those stocks. So you know, you got to be trading the more liquid stuff, is what I'm saying, after hours, because there's just no trades happening in anything else. But, you know, Bank of America's right now a 1 cent market. We just had Citigroup report. We know how I like to trade the news. I trade, you know, any breaking headlines. Sometimes do the overshoots. You know, I'm news interpretation, so I've got that little spin on it too. But, you know, in days like this, I'm not that worried about the news. I'm worried about, you know, the arbitrage, where you get stocks that all of a sudden, boom, something's trading up 4 or 5%, while index is up 1.5%. If the beta on that thing is 1, it should only be up 1.5. So that's a stock I would short. That's just kind of, you know, how you're doing, you know, the different arbitrage around it. Trying to avoid news. I mean, if you got news on something, it's going to be up substantially. Square's up 8% because Square obviously is, you know, got news on it. It's got a huge upgrade here this morning, so it's really ripping here. But, you know, you've got to be aware of the news when you're trading these things as much as you can. But for the most part, when you just get people want out, people want in, and they're willing to get in and out after hours, and sometimes they're willing to get in and out after hours at not that great of prices.
What about now it reopens at 4 a.m. Do you ever transact on Interactive Brokers on that, or?
Yeah, I can do IBS 4 a.m. So you can use Interactive Brokers, and obviously I'm through Goldman Sachs. So I'm using Ready.
Okay.
For the most part, I do some IB stuff though. I have an IB account as well. So
okay.
Sometimes I do some stuff over at IB, but for the most part, I'm doing most of my stuff with Goldman and Ready. But the IB stuff, I try to do a little bit more longer term stuff. You know, maybe I'm positioning something over there a little bit differently. But sometimes, you know, the locate, maybe I can't get a locate. Maybe I can get one over at IB. So then I would just go over to IB and trade it. So it gives me another, you know, set of, you know, a whole another inventory to short stocks.
Right.
So, which is nice as well. So, yeah. So I trade, you know, right now, just for instance, I got 2 trades on Interactive Brokers, one Canadian and then another one, which is Marvel Technologies, which was upgraded there today. And then, and I often do a lot of the upgrades and downgrades in Interactive Brokers too, because if I'm trading those things, I can monitor it a little bit better. I can use alert systems and different things. And IB's got some pretty good tools.
What do
so
you
there's
think?
Different reasons for using them.
Oh, I know we got you for a few minutes here. Well, just Sid's asking, just, you know, any overall thoughts here on the sell-off and the rebound? And I also want you to comment, you know, a lot of these banks are getting nice rebounds here off some pretty ugly 2-day candles. I mean, I'm just looking at like the previous day's highs in these things, and I'm thinking, man, I don't know if it's going to have the gas to get there.
I mean, do I think the bottom is in here? No, I think you're looking at a dead cat bounce. I think you're looking at a lot of people saying, whoa, they were really pumping it on CNBC last night. Kramer's like, you got to start buying stocks. And this, I agree. Long-term invest portfolio, maybe you should be buying a little bit here, nibbling in. I mean, there's some good deals to be had out there. I really haven't been doing. I've been so busy trading my day trading accounts that I haven't really put anything in my long-term investment accounts. I probably should, though. I should probably go and, you know, maybe look at a few stocks that we're looking at, maybe take that opportunity to do some investing. But I don't think the bottom is in. I think you still got the market spooked. Yesterday, we were up a little bit, and they just ripped your face off there. We had a pretty good rally from 9:30 to 10. And me and you, Joel, got caught up in that a little bit too. I mean, I was like short. I'm like, holy crap, that was a vicious shakeout. I mean, you saw some tech stocks really wickedly pop. I mean, Square had popped up into the 73 handle, I believe, just shortly after the open. So you can see 73, 74. Before, you know, later in the day going all the way down to $65. So there's going to be these rip your face off rallies, and this is one of them. Obviously, if you were short overnight, you're getting killed. But I mean, do I think it's safe to come in the water and start, you know, just buying everything again here? No, I think I'm more apt to sell the rallies as opposed to buy the dips. So I'm more inclined to sell today's rally, even though I'm hedged right now. I'll still be positioning and looking more to lighten up into this rally.
Okay, let's see. Stock Hunter is asking me for a specific level in the S&P right now. I'd say above yesterday's high, and that was 27.98.75. This just rounded off to 2,800. I'm just going to use that one as a bogey. I'm going to have to, obviously, when you have a week of, action like this, it takes much longer. You know how I do my sheet that is for the spoos. So on Wednesday, I just had to delete everything because it wasn't, the only thing I could put
wasn't applicable.
The only thing I could put in there was the close. And that was it, because the daily pivot, the other numbers that I use, I'm like, okay, well, that's not going to be good. And I just tried to pick up, some monthly, weekly and monthly levels. I didn't go down to 27.12 and a quarter. I think I had 27.36 is my last number. But anyways, all right. So that's thoughts on the overall market. I know
there's just a lot of different stocks. So I would say if you're a long-term investor, and a lot of our listeners are, have your shopping list ready. And maybe, I don't know if I'm coming in here this morning and buying because you've just ripped up 445 S&P handles here. But, if we get a dip intraday, which I think we could, maybe have your shopping list ready. Maybe the short-term low is in because, we really had to rip when we got down there to 270.36, it kind of looked like short-term capitulation. So maybe that short-term bottom is in. I think it'll be defended now. I think you'll have people willing to buy 271, 272.
Yeah.
But am I buying it up here at 276? I think you're on the wrong side of the trade if you're coming here and buying this open because there's going to be a lot of institutional managers that are still spooked. There's going to be a lot of institutional managers that are looking to lighten up into this.
And also, let's say, you've been building a short over a period of time and, you're just hoping for, a washout to like 2,500, the January lows. And, you're scratching your head now. You're like, did I miss the bottom? So you're going to find it. Just keep an eye on just like a general, general idea, keep an eye on the previous day's lows. Like there's no chance for Twitter. I won't say no chance, but 27.74. Yesterday's low was 26.19. Maybe the closing price now. If Twitter gets unchanged on the day, I'd be a little bit more interested and then be able to lean on that 26.19 low.
Twitter's upgraded too, so it's probably going to be a tough sell for it to, to get all the way down unchanged. But again, Twitter is still high beta, a company that doesn't make a lot of money. These stocks are still out of favor here right now. So if you're trying to buy it this morning, you are trying to call the bottom. And again, we've talked about this before, just trying to randomly call bottoms can get you hurt. I've tried a couple times on Twitter on the way down and it hasn't worked. So obviously I'm on my steak dinner with you, which is not 2 steak dinners, Joel. I think it's like 5 by now.
No, it's 4.
It's like, it's
4.
Is it 4?
Yeah, it is 4.
4 steak dinners.
I knew you would get that.
You need to stop betting steak dinners.
On Twitter. They're all on Twitter. They're all on Twitter too. I bet you a majority
Stop betting Twitter and stop betting steak dinners.
But I think you owe me like 3 lunches. And I cook a really good breakfast. So no. Anyways, any other stocks that you're looking at here? Maybe for looking a little bit more longer term by the dip portfolio.
What am I looking at? Longer term. Oh, it's tough because I still, and somewhat I think China had a really good rally there yesterday. So I kind of look at the pull. If we get a pullback here, some of these Chinese names, maybe I'm going to just jump into some ETFs. I don't really have a very good shopping list here right now is a problem. And I'm spooked a little bit too myself. I always get spooked in this type of when these things sell off significantly there. But I think, if you're buying stuff longer term, I think you'll be happy when you look at this, a few years from now. But again, you've got to keep it in perspective here too. Maybe you want to look at the world markets a little bit more because the S&P, and I don't know if you guys had a chance to talk about this yesterday, but we were talking a bit about it overnight. The S&Ps, if we look at what we've done since 2012, bring up the S&Ps, and what have we done? We're up like 150% or something like that, are we not? Where are we in since 2011 or 2012? It's 2011. Go 2011. So in the last 7 years, let's say, what have we done on the S&P?
Let's see. We ended well, we had a dip in 11, but we ended 2010. I'm going to the S&P cash index here. 1257 was where we ended 2010.
So you're up like 120%, let's say.
Yep.
Or Yeah, somewhere in there. So am I doing the math there right? 100,
Yeah.
1,220,
Yeah.
say 130% in the last
That's
7
about
years.
right.
Now you bring up China, you can go to different indexes and look at that. And over that same period, China's like FXI, if you want to look at the FXI as an indicator, it's down. I mean, the last 7 years, China's down. Is that not insane? I was looking at the Canadian markets, and you can look at, XIU in Canada or different things, look at the main ones. In Canada, in 2011, we were $20 on the XIU, we're $22.84. So we're up like 15% in Canada in the last 9 years. So it just goes to show you how much the US markets have outperformed. I mean, if you look to Europe, and what's a good Europe ETF, Spencer? You know these things. Give us a good one.
Man,
one that kind of.
I'll look it up real fast. But top of my head, Europe, I couldn't tell you, but I'll look it up real fast.
Okay, give us a good Europe one. You can look, to Japan though. EWJ is one you can look at. Japan's done a little bit better. Since 2010, we were 43, we're 56. So we're up maybe 30% in the last 7-8 years. And Europe, I would imagine, is probably down because Europe has just been in the gutter.
In terms of
I have one.
Yeah, I'm looking at. Let's look at VGK.
VGK. So
Yeah.
bring that one up. Last 10 years. So 10 years ago, VGK was $52. It's $52 a day. So I mean, in the last 8 years, Europe's up nothing too. So the world markets have absolutely been in the gutter. So you can see how much the U.S. markets have outperformed. Is that sustainable? Are the U.S. markets just going to continue to be the best place to be? And they, more than double over the last 7 years, and all the other markets have stayed stale. I don't know. I mean, maybe it's an opportunity to start looking potentially at, world investments that are getting their butt kicked that haven't ran up for 7 years. Or maybe you're buying the dogs if you do that. So, but anyways, I've been trying, and slowly increase my exposure to China. Slowly, just as it comes in, I buy a little bit more of the ETFs. I've picked on a few stocks. Like I said, I've done a little piece of Alibaba, but my bigger positions, I'm usually doing ETFs because I don't know that much about all the different Chinese stocks. So I just buy an FXI, or I'll buy. There's equivalent ones in Canada. When obviously I'm Canadian, so I'll use those ones. But like in EM, emerging markets, these have all been in the gutter for 7 or 8 years. So it's not like we were kind of like, if you've got your blinders on and in the U.S. markets thinking what a raging bull market, it has been in the U.S., but that has not happened everywhere else. So maybe you're taking those opportunities to maybe increase exposure elsewhere as we continue to, those world markets that continue to underperform, but maybe it's going to be a catch-up trade eventually.
Okay. All right. And let's see here. Just tell me about all the buy imbalances here and get it over with.
I got to bring them up, actually. I minimized the screen, so hang on. Let me just, I got to bring it up.
And also, boy, oh boy, was it you I was talking about Tesla yesterday, or was it Nick? Because what I noticed about Tesla yesterday is that it did not take out Thursday's or Wednesday's low. Wednesday's low was 47.77.
Yeah.
Yesterday's low was 49.03. And I was watching that thing, and someone was accumulating like some major stock in the lower 252, 250. I mean, they just weren't moving. They were just absorbing all the offers. And I'm like, man, oh man, am I really going to try and take a shot in Tesla here and learn, and lean on that low?
I mean, the headline risk is what is there. You can lean as much as you want. If it comes with a negative headline, could open down 30 points in your face. But that's the risk, But if you are just trading technically and you're intraday trading it, I mean, you got support well defined here: 247.77, 249, 249. So I wouldn't argue with you. But again, this is, a stock that is, higher beta, doesn't make money. It's kind of stock that is out of favor overall right now, but it's also its own animal. I mean, Tesla's got its, it's got its investors, it's got people who love it or they don't love it. And, it's its own animal to a certain extent, and I don't think, it's such a hard one to call. And like I said, this is one, it seems like when I don't own it, I want to own it. And when I do own it, I can't stomach it. So I think I'm just done with Tesla. I'll day trade it, but I don't think I can put it on for swing trades or investments anymore because I just can't stomach it.
Yeah, I think maybe I'll just put it in an account that I don't sign into and just forget about it, and then I won't be. And then if it gets hit, it gets hit. So all right, we're gonna let you
and then 5 years later, you remember you have it because you're gonna forget.
Yeah.
And you.
Oh yeah. And then I'm gonna
my kids will be
complain
like,
about it on
"Why
the
did he
show,
buy that
everyone.
stock?" But okay.
All right. Well,
If it goes up, I'll complain about it. If it goes down, I won't say anything. I like to complain. You guys are my sounding board there. So like I said, if somebody listened to the show for the first time, they're probably like, man, this guy never makes money. All he does is talk about his losers. I like to complain a lot.
Yeah,
so.
someone did mention that to me today, and I just said, you know,
quickly, we've got a guest coming on. I just want to say the banks are catching a rally here now. They're starting to rip higher here. So you couldn't pick a better day to report. I mean, you know, just like, you know, 2 days ago, we were talking about the Walgreens earnings and stuff. Tough day to report when the market's going straight down. You could not pick a better day to report here today. They just want to buy stocks. So I know there was a little pullback there, and PNC is trading in the red. I know Wells pulled back a little bit initially, but it's been bid up there too. So they love stocks again. At least right now, at least for the next 10 minutes.
All right, let's talk it out with our guest, Mish Schneider, Director of Trading Education and Research at MarketGauge. We'll be right back with Mish. All right, welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick, now joined by Mish Schneider, Director of Trading Education and Research at MarketGauge. Mish, how's it going today?
Great. Good morning to you both.
Good morning. Tell us what the past few days have been like for you.
Well, not really surprising, I have to say, because I've been anticipating that we would have some kind of volatility come back to the market as the last couple of months with the Fed policy of raising rates, oil prices going up, and some of the modern family breakdown, which I know is the thing you wanted to talk about today, was happening before the actual breakdown. So we were getting little clues all over the place that something was coming. And I'm not even talking about any geopolitical situations. It was really all financial and technical.
All right. Before we get into the modern family, just explain exactly what that is.
I'm sorry, say that again. You cut off.
Explain what the modern family is.
Oh, okay. So it's something I've been on the show before, talked to you guys about. It's something I put together several years ago because I think as a family unit, it really gives you an amazing idea of what's happening in the macro. So it's one index, which is the Russell 2000, and 5 sectors: transportation, biotechnology, retail being brick and mortar, regional banks, and semiconductors. And if you look at all of them together, you really get a good picture of the overall U.S. economy. And that's why I put them together like that. I've actually even created cartoon characters for them and dolls because it has worked so reliably in keeping you one step ahead of what's going to happen in the market.
All right, so I'm pulling up a chart you sent over of the IWM right now. Tell us exactly what we're looking at here.
Spencer, let me throw one question in here.
Okay.
Why the IWM, Michelle?
Because you have most of the stocks, in fact, all of the stocks in IWM are manufactured or produced in the United States. So it really gives you a pulse of what's happening in the US economy. So for example, NASDAQ, which is, basically some of the big stocks and the tech stocks and the FANG stocks, not necessarily representative of what's going on here in this country. Whereas you get the smaller companies that are produced in the United States that you would see in the basket of the Russells, you get a much clearer idea of what's happening right here in the domestic scene.
All right, so I've got a chart up of the IWM. Explain what we're looking at.
So you're looking at the monthly chart?
Correct.
Let me just make sure I'm looking at the same thing. Hold on. Okay, so, it's good to look out, and that's why I sent you two things. I sent you the weekly charts of the entire Modern Family and the monthly chart. So obviously you could see that on the daily chart that broke down first. And when the Dow was going new highs a couple of weeks ago, IWM was floundering and the rallies were getting shallower and shallower. So we saw the breakdown. It went into a warning phase first, which means it broke under the 50-day moving average, and then obviously 2 days ago under the 200 with the follow-through yesterday. So I looked at the weekly chart. The 50-week moving average had been intact since March 2016 and broke down yesterday. So that's why I had to go out even further, because we really want to see if this is a correction or if this is really a sea change. And now any rallies need to be sold and we're going into more of a bearish phase going forward. And that's why I looked at the monthly. So what you're seeing on that monthly chart is a channel line that actually, if you extend it back, goes back to about 2013. And of all the indices that have that same exact channel line, the Russell is the first one that's getting close to that major line of support there on that cyan line at about 150. And then the line underneath that, that's a darker blue, that's actually the 23-month. So we're in that 2-year cycle testing major support.
And so do you see, I guess what would have to happen next? If let's say it broke that support line, what does that do for you?
Well, it really is a game changer, and that's why I'm looking at a couple of things. What happens along with that breakdown should that happen? What happens to the dollar? What happens to the rates? The pressure to keep the rates status quo and possibly bring the dollar down, to me, would be a tremendous opportunity elsewhere in commodities, for example, which we started to see yesterday. A lot of the agricultural stocks and also the metals, particularly the miners, went up big time. And we have a historical low ratio between equities and commodities that goes back over 100 years. So I would change my focus. I already have changed the focus on a much smaller level into commodities rather than equities. So that's what would happen if that overall chart really breaks down, or the rally that we're going to have today isn't enough to really rescue some of these indices. Now, that's IWM. Qs and the SPYs are in much better shape.
We're on the line with Mish Schneider, Director of Trading Education and Research for MarketGauge. Mish, I got a question for you here, and Spencer asked you about that trend line and breaking it. Now, man, do you do it like on an intraday basis? I know you look a little bit longer term. So are you looking at these levels like on a closing basis or an intraday basis?
Well, first of all, obviously a weekly chart, you need a weekly close above or below. So like, for example, if you're looking at, let's take a look at SPY, because that's really sort of holding. It closed just under its weekly 50-week moving average at 273.90, we'll call it. So right now it's trading above that. So it has to be a weekly close below in order for me to confirm that it's actually broken down after that 2-year run that it's been holding it. So that would be one thing, and that would probably be enough to stabilize the Russells. However, and here's the key, on the monthly chart, hard to know, and we're still not even in the middle of the month. We won't really know till the end of the month in October. So you've got to kind of look at a combination, and you've got to look at the relationships of everything. So if the SPY holds, which causes the IWM to rally, and the IWM, sorry, I'm reaching over again, cannot get through its 50-week moving average, Obviously, I don't think so today. That would be extraordinary, but it's up at 159.30. And next week, it tries and starts rolling over and failing. I don't care what the SPY does or the Qs does. That would tell me that the rally wasn't enough to really reverse what looks like an ominous trend for IWM. And then we'd be back to looking at the monthly chart. By the end of October, if that breaks down under 150, that would be disastrous. If it holds, then my next question would be, A, let's look at the rest of the modern family, and B, how deep or shallow is that rally?
All right, I'm bringing up another chart here, Mish, of the S&P Commodity Index versus the S&P 500. Tell us what this chart is showing.
Well, if you see that actually the ratio between the two is close to a 100-year historical low, and it started to flip a little bit to the buy side for commodities. And if you look at the peaks on each one of those, they all happened during some type of crisis. So the first peak was after the Israeli war and the gas shortage. I guess maybe you guys are old enough to remember when you had to stand online for gas. I, of course, don't remember.
Me.
Joel
Just me.
Joel does.
Just me. These guys are, I don't even know if their parents were born then, but anyways.
Exactly. Then the next peak was after the Persian Gulf War. Okay, I'll admit I was around then. And then the peak after that was the mortgage crisis. So you can see what happens during some type of crises. Commodities go up, equities go down. If this is flipping up, I'm not saying there will be a crisis, or, I'm certainly not hoping for one. But the technicals always precede the fundamentals, which is why with a lot of stuff going on, tariffs, the Fed, oil prices, which, I think are still in a very bullish mode. Any correction right now seems to be a buy opportunity. Now, inflation, which was kind of muted, if that starts to accelerate, any of these can cause some kind of bubble. We just don't know. And that's without the possibility of anything happening, on a worse situation, would be like a war, or, North Korea blows off a nuclear or something. So, you have to be prepared in advance, but that's the very different long-term than what we're talking about right now. What do you do today? And so I wanted to mention that a classic reversal bottom would be if, for example, looking at IWM, it closes over yesterday's high with strong volume, and then you might want to take a little poke at getting back into the market from the long side if you got shaken out over the last couple of days. But if we don't get that confirmation, or like I say, if that rally gets shallow and doesn't really get much follow through, I would probably look to get out very quickly from the long side.
All right, Mish, before we let you go, sort of any final thoughts? It's Friday. It's also earnings season. They'll pick up more next week. Any final thoughts heading into the next week or two as to how you're going to approach the market?
Well, I'm going to be patient in terms of equity longs. I mean, there's a few things that are always having fun and going counter, like a small stock, for example, like Pandora, which was really under pressure for a long time, outperformed the market yesterday, and now I can see in the pre-market that's due higher. So, I may look at some of those situations like which outperformed the market and is in a stronger phase. So, for example, with getting back to that Pandora example, and I'm sorry, I'm leaning forward here to see, it's actually maintaining its bullish phase. So, that's probably the best thing to do now, is look for things that outperform, that are still either in a warning going back to bullish or retrace down to a key moving average, and now we're getting some kind of pop. But don't get married to anything until we see how the macro picture evolves. That family, the modern family, has really broken down. Regional banks, super broken down. Semiconductors, super broken down. So I wouldn't get overly bullish here, but a dead cat bounce, we can even rally 500 to 800 points in the S&P and then roll over. So I'd say be cautious and look at commodities. If you never traded commodities before, that's our background, right, Joel?
Yep.
Yeah. Then look at some of those ETFs like GDX. There's one called USCI, which is the commodity index, US commodity index. Those are the things to keep your eye on to see if they start moving up.
Okay, I just want to ask you, we get someone in the chat. I know you like to do the numbers and project and let the let the market work its way out for you. Any way you could project out to the end of 2019 where the S&P 500 would be? I mean, I know I just have, my guess would be higher, but, just based on historical trends. But can you point, because I like to react to what the market does, take the information, and then make the projections. I like to have the data. But if you have that crystal ball in your drawer, we would like to see it. If not, I totally understand.
Well, I could tell you that it's really going to be dependent on three things. One is, has the economy peaked out? I mean, we have unemployment at 3.7%. How much lower can it go? So the anticipation of the market usually runs ahead about 6 months. Two, interest rates. The Fed is doing the right thing. They should have been doing it years ago, starting to finally rebalance that sheet and get the rates back up to a normal level. Quantitative easing was all artificial. And number three is going to be the price of oil. So if we start to see those three things, oil accelerating, Fed's keeping the gas pedal on the rates, and on top of that, the unemployment not, starting to flatten out and maybe even rise a little bit, then I believe that as we're looking into 2019, if you want an actual hard level, looking at that same monthly chart in the S&Ps, this baby can go all the way down to 205 and still be holding a close to 7-year bullish cycle.
Okay.
All right.
Thanks, Mish. We'll get you on again soon.
All right. I love the way you say my name, Joel. You're the only one who calls me Mish, so I love that. Thank you.
You know why? Do you know why it's such a great name?
Why?
Because my favorite announcer of all time, Bob Ufer, he didnn't call Michigan. He called it Michigan. Okay. Yeah.
Oh,
So MEE. So Mish. So whatever. I think actually there's a great movie coming out about him too. So that's why the greatest announcer of all time. So great guest, great input. We love your analysis, and we're not going to wait so long to have you on again.
Thank you, Joel. Thank you, Spencer.
Yep.
Yeah,
yep.
Spencer.
Thanks. I'm still around. Thanks a
We
lot.
haven't let him go yet. Maybe at the end of the day.
All right.
Have a good one.
You.
Have a good
Y'all
one.
have a great day.
You too.
Don't buy falling knives.
And speaking of a falling knife and whatnot, S&Ps are starting to leak here. We had 2770.75 up 25 and a quarter. Dennis must be getting out of his lungs or something here. Pressure on the market. I'm looking mid-range on the day. Actually, we've been really quiet here since the 4 a.m. opening of stocks. Arbs are kind of evening out things here, a little bit more of a tame market. I'm going to look at first potential area of support is 2765 and a half, and that's mid-range on the session. We could easily touch that if if we're looking for the first bounce, perhaps that could be there. Underneath, I mean, things get wide open here as we chopped through this area yesterday. Your daily pivot's way down at 2752, and the way this market's moving around here, we could even see that closing price at 2745 and a half.
All right, 8:53 now, 7 minutes left in the show, which means it is ticker time. So I've got some tickers that I've written down from our chats that you guys have requested. So let's run through a bunch of them now. Let's start with Mylan Labs, MYL. No news this morning. Just look at the chart.
Look at the chart, and it's trading up 36 cents here, which is commensurate with the market here. I mean, you got to work your way through this red candle from yesterday. Yesterday's way up at 34.48. That was a dime below the close at 34.58 on Wednesday. So it's really hard to get interested in that stock until, you close above that 34 and a half area. Coming back on the downside. You can lean on that low at 32 and a quarter if you want. That's 70 cents away if you're looking at a swing trade. Let's see here. Underneath that, 3103. That was your low back in October of 2017.
Going over to the chip stocks now. NVIDIA looks like it's holding on to those lows.
Hey, NVDA. I haven't looked at that stock in a long time now that it's $250 or $243. Wow. Straight down I don't know what to say on this one. I mean, you're leaning on the low of the move, 234.26. You're trading up $8. Yesterday's, you get a shot at yesterday's high here, 247.56, and then I'm sure you'll see sellers at like 250, 252 and a half. That area that we bottomed at yesterday was just below the low of 238.72. If things really turn around, you could figure a 50% retracement, but at this point, I'm a little hesitant to even say that, the low of the move is in. It's $9 away. That was at 234 and a quarter.
Moving over to China, Dennis was bullish China when he was on earlier. I want to bring up a couple stocks, Baba and Baidu. Alibaba has a lowered price target this morning from Stifel. They lowered it down to 200, and UBS lowered their price target down to 220. So we talked about that like last week, right? We kind of said that the analysts were going to have to do something to catch up to the stock. So two analysts this morning lowering their price targets on Alibaba.
All right, Baba traded up $4.5 at 146.40. Let's see here. Let me change my chart to get the pre-market action. I mean, this thing has been really beat up. I'm going to look at that former low of the move. Where was that? That we took it out the other day. The former low of the move was 152.85. So getting back up to that area. I don't know if we will see that today. Get real interested if it closed back above 153. Just trading at the highs of the pre-market session. Bulls and bears are squaring it off here. 147.42 is your pre-market high. If it does go into reverse, you gap fill down at 142.91. So if you're shorting this thing, you're looking to bring it into yesterday's range. I call support right now 142.91.
And then Baidu. Sticking with China theme.
Okay, stick with the China theme. Baidu.
Same chart to me.
Well, this one is a little bit more technical here. You are clearing a double top. You guys know how I love my double tops, double bottoms, triple tops, triple bottoms. And that was not exact double top, but let's call it 199, the top of the range from the last 2 days. So as long as it holds above that, I think he's got a chance here to rally. If you fall back under 200, look for some support at the close. Don't think we'll get all the way down to yesterday's low at 189.
All right, Facebook this morning, Morgan Stanley is maintaining their overweight, but again, playing catch up, lowering their price target down to 175 on Facebook.
It's just leaking here. I mean, what else can I say? It's just, it's not getting crushed. You don't have that big old red candle. I guess you did maybe on Wednesday. 156.06. That's above yesterday's range. So use 154.81 as support. And if you're looking for another target, 157.69 is your 2-day high. That's only $1.80 away. I'm sure a lot of people would like to see that. And you have a lot of former low of the moves here. I mean, it just looks like if this thing gets back up to 160, you had a couple lows, 2-3 lows in that area. Nice psychological number. I think you see all kinds of resistance there.
Starbucks got the pop on Tuesday with the big Bill Ackman stake. Let's pull up a daily chart here. Starbucks.
Did he get? Oh boy, he gets stuffed on that one, huh? Holy mackerel! That thing popped up to. Well, you don't know when he was buying it. 59.70.
We don't know when he bought. So let's.
The people who get stuffed are the people who chase it after they announce that they're as an activist in there. Same thing with PPG.
Great point.
I mean, there is just money to be made fading those news. That PPG went up to 104 and change after hours because Peltz is getting involved after they warned. And here it is 3 days later, almost 10 points below there. So I mean, there is just money to be made actually fading these announcements when they pop. The only one I don't like to fade is Warren Buffett because sometimes he gets some follow through. But even on his, if Teva was announced, that's in the gutter now. There's money to be faded. And when these things pop 4 or 5% because of somebody getting involved and an activist involved, a lot of times it's an opportunity. When Procter & Gamble, which Peltz is involved with, sometimes they actually get something to happen. They break them up, they do things. But on an initial announcement, when you all of a sudden have a big activist involved in the stock, they pop 5-6%. It's usually a lot of alpha you can extract from fading that move.
just to defend Mr. Buffett, that was one of his associates' picks. That was not.
Oh, okay.
Yeah,
Wasn't him.
that's why it hasn't gone straight up here. Dennis, we were just doing some tickers there. I saw a little bit of a dip here, but we're still holding in here. Any changes?
Yeah, you know what? It's actually shockingly not that volatile. That's why I'm here right now, because it's kind of quiet. It's funny. You know, you think about, oh, holy cow, the market's so volatile. Well, it will be once we open, but I tell you, this pre-market, well, we've been stuck in like a 5-6 point range here. We had the rip your face-off rally overnight, and now it's just kind of hanging out.
Yeah, I think I'm calling for an inside day here. We give me an inside day on a steak dinner. I got to just start going.
Joel.
I just got to get out of
He's got to get. I just got to add to the hole. He's got to bet himself out of it. Yeah. He's one of those. That's why they put the limits on the craps tables. Is for people like Joe. You can only bet so much money, because he would just keep doubling down until he got his money back.
Actually,
he'd be the guy that would be down.
No. Actually,
you bet $10. Well, I got to bet on red again. I got to double 20 to 40 to 80. To 160, and you can see those numbers.
That's not the way I play craps. I go.
How do you play craps?
I go with a designated.
I don't know why I said craps. I meant roulette.
Okay, I don't even play roulette. The way I play craps is I walk into a casino with an X amount of dollars in my pocket, and I put that money on the table. And if that money is gone, I walk away. I do not go back until, like, if I, we're there for a couple days or something. That's exactly the way I do it. And then as soon as I could get X amount, whatever I put out on the table on initial outlay, as soon as I could put those chips in my pocket, I do that. And then
that's the way to play. I do the same thing, actually. I usually play blackjack when I go on. Not that I go to the casino hardly at all. I mean, you're talking once every couple of years, but when I play the blackjack, I always, if I start getting up, I start putting chips in my pocket. And then once I'm playing with the house's money, then you're a lot more comfortable there. So we try to trade the same way. We try to play with the house's money, protect our capital as much as we can, and try to play with the house's money. Problem is, I don't have any edge on the blackjack tables. I'm not Bob Bright here who can count cards. So, right. Long run, they're still going to get.
Have
me
you
on
talked
that.
to Bob
lately?
Do you think we can get him on the show? I know.
I bet Bob would come on.
I know we talked about it before. Maybe ping him and see if he'll come on. I know it'd be pretty tough to get.
I bet he'd come on. We've had Rob a few times. I bet Bob would come. Bob is like so insightful, but Bob is so smart. So it'd be like whoosh over my head most of the stuff. But some of our listeners will grab some of the things. Bob's a mathematical genius. Yep. So when he's coming on, he's all just numbers and statistics. And most of the stat herb stuff has come from Bob and Don. The stuff that I trade a lot of times, we've maybe put our own spin on it. But these classic strategies have come from the Bright brothers. Those guys are just mathematical geniuses. And that's, there's a reason, why Bob Bright was one of the best traders and, why he obviously made a lot of money. He came from the floor, found, those inefficiencies and exploits them. And he's just a math. And was the same thing why he can't go in any casinos anymore in Vegas, because he can exploit those inefficiencies there by, counting the cards or getting that edge. So, I mean, mathematical genius.
All right, that is going to do it for our show this week, today and for the week. So thank you guys for joining us today. If you missed any part of it, you can catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play. And I've been mentioning it for the past couple of weeks now. We're only 3 weeks or so, about a month or so away from the Benzinga FinTech Summit, November 14th in San Francisco. If you go to bzsummit.com, enter the promo code PMP VIP, that's PMP is in PreMarket Prep, and very important person. You'll get 80% off a ticket to hang out with the biggest names in the brokerage space, and yours truly, I'll be there as well. So again, November 14th for the Benzinga FinTech Summit, bzsummit.com. And for those of you who are trading pre-market during the day after hours, you should check out Benzinga's real-time news platform, Benzinga Pro. If you go to pro.benzinga.com and you enter the promo code AMPRO, like Alpha Mary, Papa, Romeo, October, you'll get 25% off a Benzinga Pro subscription. That gets you access to our real-time headlines, real-time quotes, breaking news, SEC filings, PR Newswire, our Squawk, our chat rooms. So a lot of stuff in the Pro. Check it out, pro.benzinga.com, promo code AMPRO. And that'll do it for us. So last thing is, please remember that everything we say on our show is for informational purposes only and not meant to be investing advice. And on that note, we are out. So hope everyone has a good day. We'll see you folks on Monday, and good luck out there.